Hey traders, I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DX Trade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too, but that's not all. By signing up with FX2, you get access to C-Trade. C-Trade is a trading terminal where you can create custom indicators or download ones from the community. Get access to all of this and more by signing up for FX2. So, for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, guys. Welcome back to another live stream. Hope you're doing well. Hold on. Let me do my little intro music. Here we go. Nick Yacht. There it is. All right. Welcome back, everybody. Again, got another week here, and this is a pretty crazy week. I feel like I say that every week, but last week was, a big one because you had CPI, PPI, but this week we also have some key stuff. You got meeting minutes this week on Wednesday. Also on Wednesday, you have NVIDIA earnings after the bell. So it's going to be a busy week in terms of market volatility. I was taking a look at the options premium, pre and post NVIDIA earnings, and it is pretty clear that the market is poised for moves on NVIDIA earnings. Now, I know that not everybody trades stocks or obsesses about stocks, and I totally understand, but there's a lot of stuff we got to talk about with the NVIDIA earnings that are coming and what it means for the full picture, what it means for potentially even the dollar and the U.S. economy as a whole. Just so you guys know, the NVIDIA kind of performance on Wednesday goes well beyond just stocks. Remember that semiconductors nowadays act as almost a proxy for the entire economy. If huge demand is out there for semiconductors and the tech trade is strong, it's usually a good sign for global health, not even just the US, but just in general. What is chip demand looking like? And if it's accelerating and expanding, that's good for the global economy outlook. And again, to the contrary, if you get a disappointing earnings in any shape for NVIDIA, it's going to be very, very messy. Now, my opinion is NVIDIA will probably smash it out of the park. It has a winning team. Their management is incredible. They're a cash machine these days. But that being said, everybody knows those things that I just said. Everybody knows that NVIDIA is top dog, that they, excel at everything. And that's why the standards for NVIDIA are so high. We are near all-time highs for NVIDIA as we, stream today. The S&P 500 is near all-time highs. The NASDAQ is at right around all-time highs. And don't even get me started on the main story of today, which is gold. Gold is doing crazy stuff. We got a lot of stuff. I know there's already 15 questions in the chat. I know, guys. Don't worry. We will get to gold here. We're gonna discuss the latest, what we know here about kind of the geopolitics that have taken place in the last 24 hours. The Iranian president was taken down, or the helicopter that he was in collapsed or fell down, and he I believe the news is that him and there was one other important figure. Does somebody know who else was in the helicopter? There was one of his ministers. Anyways, the president passed away, and now, during that event, there was tons of questions as to what's going on. And just remember that gold doesn't even need hard news in order to rally on fear. It just needs the rumor. And so there were plenty of rumors surfacing last night. I watched gold on the Sunday Open just continue to explode higher. And, there were concerns as to whether or not it was, foul play, if this was some sort of an attack, or if this was just, a unfortunate coincidence. I believe that it took place near Azerbaijan, which is to my knowledge, and my knowledge is limited, not an incredibly friendly country to Iran. So please correct me if I'm wrong in the chat. Again, I do not claim to be an expert, but trying to report at least what I know and what I've heard. So again, that situation causes questions, causes concerns. And with questions and concerns, we saw gold spike. Now this morning, a pullback, a big drop in the price of gold has taken place so far. The foreign minister, yes, that's correct. Yep. So yeah, lots of uncertainty over in that region. And does this really cause gold to start to trend much higher? This news alone, I don't know. I don't necessarily think that I believe that Israel did not claim any partition in this. I'm not sure that they would, even if they did. I have no idea. But my point is this: for now, there's a big question mark in the Middle East. I don't know that equates to violence or any sort of escalation. I have no idea. But regarding all of that, no idea and question mark, that's why gold is up. Remember, gold doesn't have to have hard news. It just needs to be concerned. There needs to be, some questions in the air, and that will be enough for gold to rally. I think you could eventually add another position on gold. Wouldn't be surprised if it hit 30,000 this year. Lee James, if it hits 30,000, oh my goodness. Let's hope it doesn't, because if gold hits 30,000 this year, the world absolutely must fall apart. That's the only way 30,000 gets hit. In that case, we won't even be worried about markets or, gold or dollars. It won't even matter at that point if gold hits 30,000 this year. But if you're talking 3,000 this year, I think that's probably what you meant based on might have been a typo. Let's hope. 3,000, still very, very ambitious, I think, for this year. But could it happen in the years to come? Absolutely. I think gold to 3,000, gold, many people forget the history of gold. If you've looked at a price action chart of gold, here's the thing: gold can triple, gold can quadruple. In fact, I believe I'm forgetting the dates, but there's been times where gold has 7x'd in like a decade. So let's take an example here, just really quick. Let's say 2008, right? 2008, around this time through 2011 with the big run up, gold went up 125%. And if we take a look, like here's 2004, I mean, it went up 100% here. So just remember that gold can, actually, here's a good example. Let's go 1999 through like 2010. I mean, you can see it's like a 200% run up. So gold can do these crazy moves, and it can last a lot longer than people think. So when we see these moves through the highs, a lot of times people are like, oh my gosh, sell the all-time highs. People love to, when something is ripping higher, they love to try and find the top. They like to short it. They like to sell against it. But please understand that this gold market right now, the path of least resistance is up, in my opinion, because the trend is up. There's no question that when something is hitting all-time highs, the trend is up, right? I don't know anybody who would dispute that if something is breaking all-time highs, that the trend is up. So when I look at the 4-hour chart, and yes, you get these violent pullbacks, but again, I've said this so many times, so I sound like a broken record to my regular friends that watch the streams. When something hits all-time highs, usually it is a bullish thing. Something has really triggered, something has gone on to get it there. But not only that, people will freak out. They'll say, oh my gosh, look at that big sell candle. But look at all the green candles before it, right? We have this tendency to look for the reversal. I don't know what it is about us as humans, but traders love to try and find reversals in charts. This is not, in my opinion, a proven reversal whatsoever. Yes, it is a short-term, hey, you might be seeing a pullback. Hey, we might even pull back to 2,400. But for me, this is totally intact, totally in an uptrend. Even if you see another big red candle come in like this, I'm not phased by this. I'm still bullish. Unless, from a price action standpoint, what would get me out of this trade is I've now moved my stop loss just below this market structure. I'd like to see 2400 hold. That would be my limit to where I'll stay in the trade. If it breaks 2400, I'm taking profits. But also, I know that there's going to be a lot of people who are saying, should I short this right now? Should I go long this? I think it's going to go back here. You can play that game all day long. But in my opinion, going to here, but if you missed the move, I think you missed the move. Like, yes, there may be an opportunity to potentially add here. This would be the only spot. But for me, I don't have any plans to add more to this trade. This trade has taken up a huge chunk of my portfolio. I talked about that on Friday. This is nearly half of my portfolio right now, which is a lot. But all trades that I'm in are in profit, so I can't lose money on gold anymore. And that's where I want to stay. I really don't want to add much more to this trade. Yep, we bring the cash register on this one. It is going to be a winning trade no matter what. The thing, however, is I just have to be patient now. Is there like a part of me that's like, maybe I should just kind of close out now because it might come down and hit my stop loss? Yes, but I've done this for a long time. And I've learned that the second that I think it's overdone, it's just getting going. I don't try to predict the tops of uptrends or the bottoms of downtrends. I really find that over the years, that has been a net negative to my trading performance when I try and do that sort of thing. So that's why I personally, and this is how I like to trade, I like to, obviously, what got me into this trade is fundamentals plus simple price action. But what keeps me in the trades that run like crazy is a trailing stop using market structure and letting the market tell me when it's time to get out of this trade. I am not phased by this pullback. I'm not worried by this pullback. I'm in profit. I've done my homework. I'm in the trade. And obviously, it's a really easy spot to be in, to be floating in profits and not to have anything to worry about. But again, that's where I make the most of my money. Most of the money that I make in trading is environments like this, where I'm just saying, I'm chill. Whatever it wants to do it. I don't care. If this thing breaks lower, I will make May will be a great month for me this year. If this market rips and continues, which do not think for a second that it could not do that. It could totally take out those highs and keep ripping to 2,500. I'd love it. Obviously, I'd love it because I'm long, but I wouldn't be surprised if it happens. So at this point, I am letting the trade play out. So why do I tell you all that? If you're somebody who just waltzed into the stream and you're like, well, do I buy it or do I sell it? I'm not here to tell you what you should do. You should have a strategy that tells you when you should be buying, when you should be selling, how you manage a trade, what your risk size is. None of those things can be provided to you on a silver platter. And if you're looking for that in your trading, I highly encourage you go ahead and close your laptop and go outside because you shouldn't be trading. Okay. I'm not trying to sound harsh, but if you took that advice, if you're looking just for easy answers in trading, stop trading because you're going to lose a lot of money. If you're willing to put in the work, then this might be the thing for you. But please understand, trading is incredibly difficult. And, I don't catch trades like this very often. So when they happen, I'm not going to mess this up. I've waited too long to find this trade. What I mean by that is I take a lot of entries like where price will come down to my entry point and then stop me out. Or I get into a trade and it goes up a little bit and then I trail my stops and it comes back and takes me out for break even or a very small profit. For me as a trend trader, as a trend follower, I've waited so long. To be honest, I've had a nice little fortunate win streak recently, but I spend so much of my time waiting for the right setup to finally form that I am not going to be messing up the opportunity that's in front of me here. So what I mean by that is I'm not going to preemptively close because I feel like, oh, it might come down, it might do this, it might do that. No, I've waited too long. I finally have the right trade in front of me. It's time to execute. And what I mean by that is I've added where I was supposed to add according to my strategy. I've trailed my stop along the way as I was supposed to according to my strategy, not from the hip, not from my gut, not like, oh, I feel like it's going to do that. That is how you gamble away your money. Having a strict, very straightforward strategy that you stick to is your savior in this stuff. So anyways, if markets come down here and we bounce, then great, I'll stay in the trade. If they bounce from where they currently are and they don't go any lower, I'll stay in the trade. If the market comes down to this level and it fails to hold this level, my stop loss is in place. I'm out of the trade. Okay, there you go. Does that make sense? If that was helpful to you, can you just do me a quick favor and hit the thumbs up button on the stream and type yes in the chat? Just let me know that made sense. I just want to make sure, again, people ask, they will have comments on my trades all the time. Like, Nick, you should close it. Like, just realize the profit. And, I've just done this for long enough that when I have a runner on my hands, messing it up is the worst pain. It's worse than me taking this stop loss. And this may be what is, the strongest force in keeping me in this trade. The most painful thing is if I were to close this trade because I'm afraid, not following my rules, I just close the trade, and then I look back at it and the market rips through the highs. That would be the most painful thing. Taking a stop here and trailing out for profit, that's not painful. I'll just take profits. All good, right? So you have to think about, like, what's the path of least resistance for gold right now to the upside, right? Yes, you had a red candle here, but that doesn't mean the trend is over. People who've been saying that have been getting smoked for a long time, right? Why am I bullish gold? Well, I've talked about this a lot, but gold is getting a bullish reading on the edge finder. This is what got me into the trade. The commitment of traders data showed institutional money was long. Seasonally, it's a good time of year to stay long gold, according to the last 10-year average. The trend is to the upside. Economic data, PMI data, GDP numbers, retail sales, inflation statistics, employment data. These are all screaming bullish biases on gold. And this is, again, with the edge finder, the purpose is to automate the analysis of fundamental analysis to some degree, right? So all of these figures aligned, and that's what got us this really strong reading, and it has ended up being one of my better trades this year. I think it's like my third or second best trade so far this year. We'll see where it goes. If it closes out at stop loss, I think it's like my third or fourth best trade. But if it breaks through the highs, it could be number one. So we'll see.
It's just a lot of green, just how I like them.
Yeah, James, can we get a perfect candle in Frank's absence today?
Perfect candle. That green candle right
there. That's what we need right now. We need a perfect candle to the upside. Just give us one of these. Maybe if I draw it on the chart, it will come true. So if we want it to, this is, let's try that theory. This is the next candle that we want to see. We just want to see one of these. All right. Straight to 2,800.
I've been drinking.
Yeah. No, but again, just, I think staying like agnostic with your positions is so much easier said than done. But I find that the winners for me are like the easiest ones to hold on to. So anyways, S&P 500 also near all-time highs. The NASDAQ's up pretty good, 0.35% today. And remember, this week is really big because you have NVIDIA earnings. Also, let me just mention, I pulled up the Edge Finder for a second. If you guys want to try it out, there's a 30-day trial that we're going to be dropping a link to in the chat here. And also check out we got some new stream banner stuff going on. So try out the Edge Finder. The link will be in the description, but we're also going to drop a link to it in the chat. If you're hanging out with us live, click this link right there and you can try out the tool for 30 days. If you're watching on Twitter, which I know we have like 100 people watching on Twitter or X. What's up, Twitter people? Thank you for hanging out with me. Again, if you would like to try out the Edge Finder, the link for that is in the pinned comment below. So check that out. All right, so let's also take a quick look while we're on the Edge Finder at the commitment of traders data for this week. So COT data is live. Let's take a look. We got our latest update. Gold still very bullish. So I like to see that. Silver bullish, Dow bullish, the Nikkei bullish, Swiss franc, yen, CAD, Aussie, and the 10-year treasuries all bearish. Now, this is from a net overall futures contracts traded positioning. But then if we take a look at the weekly filing, this will show us, this chart here is my favorite on the COT data, because what it does is it shows us the week to week filing, shows us like as of the latest week, what did they buy or sell or make moves in. So if we take a look at the Nikkei, for example, the Nikkei had a significant buy order, which I thought was really interesting. So you can see they really closed a lot of shorts on the Nikkei. The Dow Jones, they also closed shorts and added longs. So getting a nice little net change there. Platinum, they saw, some buying there. 10-year bonds, 10-year treasuries, what we can see here, they closed substantial number of shorts and they added longs. So very interesting there. And the Russell, some buying there as well. Added some shorts, but added significantly more longs. Dre, what's up, man? Should have sold GameStop. I absolutely should have. But when I first talked about that strategy, had I shorted GameStop, I would have been down like 200%. So let me humble myself. My initial idea when I talked about it on stream the first day it was popping, had I shorted right on the open, it would have gone up significantly against my short position. But day 2 would have been perfect. But I never took any shorts, and I looked at it and I was like, you know what? I'm not gonna set a bad precedent to my audience, because I said when I was talking about it, even though I think GameStop is going to continue to be what it is, which is a $15 stock in my opinion, and it's coming right back down to 15. Yes, I shoulda, coulda, woulda shorted. And Dre, I know you're messing with me because Dre's been here for a long time. He knows you gotta wait for your setups and take what's real to you. But I also thought about it and I was like, okay, I think it's going back to 15, but this is not how I make my money, right? I do stuff, when it comes to trading and making money trading, I'm looking for things that are repeatable, that are consistent, that I understand. And I don't actually understand GameStop, even though I do think that it's a meme stock that is totally not worth going up to 80 and 100. And that long term, I think it will go probably to 0, in my opinion. I also know that that's not what I do to make money. That's not what has made me money over time. So I figured, you know what? I'm just going to leave it to the gamers. Leave it to the gamers. They'll have their fun, and hopefully they'll learn lessons. And a lot of people have. A lot of people, who didn't learn their lesson the first time around, they may have learned it this time, because, will GameStop go flying back up again at some point? Probably. It will probably have another meme revival, but a lot of people lost a lot of money on this move. I can tell you right now. I mean, that's the thing. It's just it's the age-old story of markets. People who don't know what they're doing, they get excited by something they see. They think they're going to break the system, and the system is perfectly designed to rob them of their money. So just be careful. Nick, if the edge finder is bullish, but the trend reading is otherwise, will you buy? That's a good question. So if I see something that is, giving me a bullish or bearish reading, but I don't see a good technical setup, then I won't touch it. I still like to, so even though the edge finder, let's take a look at like oil, for example. I haven't looked at this chart, but I'm just curious. So oil on a daily chart, I actually don't mind this one. But I think I would like to wait for a pullback. I tried to short this once and I took a loss on this one. So let's see, like this area here could be interesting. Maybe for a pullback sell. I kind of like that, but I won't take a trade just because the edge finder says bullish or bearish, right? These are not like, oh, just go buy these things just because they show up, or sell these things. That's absolutely not what the edge finder's purpose is. The edge finder simply looks across the matrix of things that we look at, right? Economic data, technical readings, sentiment readings, and it gives us a synopsis. And then from there, I'll go take a look at the charts and still use all of my, simple technical analysis rules. I'm looking for support and resistance, market structure, placing stops correctly, putting stop losses, putting size on that makes sense, but is not, inappropriate. So there are still many things that go into being profitable that are not just fundamentals. Fundamentals are incredibly important, but they're not the only thing, right? You still have to be able to size your trades right. You still have to, even if you have the perfect fundamental analysis understanding, if you're risking 5% per trade, eventually you could probably blow your account on a losing streak. So you have to understand, like, the Edge Finder is just a tool. It is not the holy grail, and we never preach it as other than that, right? It is a tool meant to assist trading, not do all the work for you. That being said, it does a lot of work for me. Instead of reading articles all day long, I can pull up the Edge Finder and get, generally speaking, the news that I need to get. Okay, so real quick, I just mentioned it for the last 30 seconds. So let me just remind you guys, if you would like to try out the Edge Finder, I mentioned it earlier, but we'll drop the link one more time in the chat. You can get 30 days access if that's something you're interested. If you want to try out our software, if you're looking to incorporate fundamental analysis into your trading, but don't know how to start, the Edge Finder is a wonderful tool to do so. You get more data in the Edge Finder just clicking through it than pretty much anywhere else that I know, in terms of just keeping it simple, straightforward. You can look at jobs data, you can look at economic growth, you can look at inflation data, both US and other countries as well. So again, highly recommend trying us out for 30 days. This is, my company's tool, the Edge Finder is, but I genuinely use it all day long. It's something that I think I no longer could trade without. It is just simply too useful. With that said, we're going to take a quick break here, and then we're going to be joined by Ivan to discuss some markets, discuss what's going on here today and what's happening this week. So stick around. We'll be right back.
Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back. Give us a second. We're sorting out the new stream layouts. Hey, Ivan, how's it going, man?
I'm good.
Hey, Ivan, it's a new week. And, last week we had a lot of data. We actually have had a lot of data the last few weeks. We had CPI last week. We had PPI. This week we have meeting minutes, and we also have NVIDIA earnings. What are you looking out for this week, and what are your thoughts on the dollar?
A couple of hours ago, I mentioned my dollar strength theory. I think we are diverging on that one now. But I still don't believe that inflation is sufficiently down. And I think I got a friend there today. What was this guy called? I just saw, who was it? Was it Barr that said that that inflation disappointed in April? So not yet.
Yeah, and that's interesting, because when you heard from Jerome Powell last week, he was more like mixed on PPI. So you're seeing a little bit. That was this morning, right? Was it Barkin that was speaking? No, Waller. Waller was speaking this morning. So so I guess the question is, and this is sometimes worth mentioning, is that the FOMC is a committee of people that have differing opinions. Not everyone perfectly agrees with what the inflation story is. So you mentioned he was thinking that the April number actually was kind of a miss, that it was actually disappointing.
Barr, not Barkin. Barr said that Q1 inflation was disappointing and did not provide confidence to his policy.
Got it. Yeah, so I guess where does that take us with the dollar index this week? What would you be looking for in order to kind of be convinced of dollar strength again?
New high, so crossing 105.
105, yeah, that makes sense, because this level, again, really key spot here. We broke underneath that. The question is, can we get above that to continue higher? So what about this, Ivan? What about the other currencies? What about, if you're looking at like the euro dollar, could perhaps some of the dollar strength come back due to other currencies seeing some more weakness? Is that a possibility too?
That's the direct translation. And I got a question also today in the very important VIP meeting we had this morning. What would lead to a euro dollar sell? We have a prospected priced in at this point, or will be priced in, a rate cut in June, 6th of June, from ECB. That could be a driver. Secondly, dollar strength would be great in that situation, and a new low would also be important before considering anything. But yeah, I think that euro dollar in the dollar strength kind of scenario is a very good candidate, though it's not going back up again. So boohoo for that new lower low.
Yeah, and I think something else to mention is that another, if you look at like the DAX, right? Like German 30, yeah. So if you look at like German 30, the DAX is actually flying super high, and it's arguably because the expectations for a rate cut in Europe are actually significantly more convincing than even in the US. So when we look at the performance of the stock markets over there, they're flying high on that idea of rate cuts. Yeah, I mean that could be a candidate. Is if now that the Fed has seen some evidence, not a ton. This is just one singular print that we saw with the CPI last week in the right direction. It may give the ECB the green light to go ahead and make their move towards rate cuts. We've heard in lots of conversations between monetary policy, leaders both in the U.S. and abroad, that the Fed is something that, of course, the other ones look at, and vice versa. The Fed is looking at what the ECB is doing. The ECB is looking at the Fed. And so, now that maybe we've started to see some good news in terms of the inflation story, and maybe rate cuts are still on the, kind of on the menu this year for the dollar, maybe that gives the ECB the go ahead to rate cut. And so if you see more progress on that side, yeah, that could cause the euro to have a little bit of a retracement. See, that's where I think that the euro has had this nice little short-term push up, but I'm not incredibly convinced of euro strength, simply because if you look at the economies, comparatively speaking, the European one is worse off. Is that right?
Yeah. And in that sentence, I don't want to dig around too much, but we are set up for ECB cut. We're set up maybe for a Bank of England cut, and we're set up for a Bank of Canada cut coming in June. So those are kind of like, that's the ones to look out for. That doesn't mean that those currencies are not going to fall through the cracks and everything is going to fall off the chart. There are still going to be normal market moves in that time period, but you might see an elevated bearishness when they do go bearish, because then everyone priced that in at the same time. But you can go higher to get a better price before falling. That's totally possible.
Yeah, that's a good point there. I mean, it might have a little bit of a short-term squeeze higher, just because for a while there, the euro trade to the downside was kind of the popular trade, but now we're seeing a little bit of mixed sentiment, and maybe it is, again, just kind of retracing before a bigger move lower. I would generally say that I think that on a longer term basis, I prefer the dollar over the euro, but in the short term, the euro looks, it's just taking back some ground. What about the pound? Bank of England status. Are we going to see the pound stay strong relative to the dollar much longer, or is this same course of action as the euro to you? What do you think?
I have one. I don't know. There is something that I need to really understand here. We have 3.2 inflation. Inflation is lower in England. England is supposed to rate cut, and that is supposed to make it weaker. But there is something in the money flow that I haven't explained. After I'm doing for 10 years, I should have figured it out now. But there's something in the pound strength. It's always strong against the dollar. Even dollar is strong. It's always strong. And I haven't really found out other than during Brexit era. So when the UK economy is like it's okay, like everything is not too crazy, it is kind of strong. So that's the one that I'm always going to be shorting dollar against the pound and almost never buying the pound against the dollar. Buying dollar against the pound because it's almost never weak.
Yeah, and I think, when you compare the European economy to the UK one, it is a little bit of an easier trade, I think, to generally speaking be more favorable to the pound over the euro. So, that's something to look at. And as you mentioned, inflation in terms of the UK for the longest time was actually higher than the US. Guys, the dark green is GBP or UK inflation, and the blue is US inflation. You can see, actually, to Ivan's point, just recently, the UK inflation actually has come under, for the first time in many, many months, the US inflation rate. So to see that continue is an interesting story. I think that, to me, I don't have the same, I guess, unwillingness to be short the pound over the dollar. I think that this could be an interesting trade. I mean, the pound USD at some point, if dollar strength does come back into the picture, might be a candidate for me. But to your point, though, Ivan, I still prefer the euro over the pound. If I was going to short something against the dollar, it'd be the euro. I just think it's a little bit easier one to pick on, to be honest.
But you know very well, Nick, that you're going to get the strongest one. Also, for me, the pound, I was just looking. Pound is the strongest today. I don't know why. I can't tell you. I can't help you, but it is. But my point of it, my reasoning, if I'm going to say so, is there is weaker ones. There is Australia, it is New Zealand, mostly always much also the opposite of dollar. If dollar is strong, they're always weak. And as well today, New Zealand is one of the weaker ones, with weakest. So in my mind, this is kind of what I generally see in the market. Pound being the strongest, New Zealand being the weakest, yen being weak, and today euro being somewhere in between. But it's just what do you call it? A choice, maybe.
Yeah.
Or sorry, just something I've experienced a lot of times when I'm trying to sell pound. It just doesn't give the same.
Well, and that's the thing too, Ivan. You mentioned, you have the Australian dollar there, you have the pound, you have so many different options. I would actually say, if you get a real risk off market, the Australian dollar and the Kiwi dollar would probably be your best candidates to be long dollar against something else, simply because, again, they're commodity-based economies. They're very dependent on global growth, and if they're not seeing global growth, I mean, everything struggles in a declining growth environment. But especially countries that are, growth countries, things that are kind of more emerging, if you will. And so if you do get a real risk off move, I would agree with you on the Kiwi dollar, the Australian dollar, as you might also see the carry trade unwind become a pretty strong trade on that side. And so you have options. And, the other one for that same scenario would be dollar yen reversing, could be a violent, trade. I know Chris Pulver, who's up next on the show, he talks about this one pretty often, or we've talked about this together as well. The carry trade unwind would be violent on some of these pairs. I think that, just for general, if the economies aren't going to crash out of the world, I think U.S. outperformance against the euro is a trade I like the most too.
So my point is, if pound dollar, when selling it, would give me fantastic profits, and it would give me the same amount of profits every time I trade GameStop, then yes, I will. Like, there's data behind the craziness. So how did this bet go, Nick? Do you remember?
What was our bet?
I bought it 30.29, I think it was. But I forgot to put
Hey,
those in the put.
Ivan, neither of us took these trades, but technically we would have both made money. Because, well, if you had closed up here and then I just held it through there, then if we had both played it perfectly, then we both would have made money. But I never actually ended up touching it just because I figured it would set a bad precedent to the audience. It's not something I actually trade or actually have opinions on or actually, make my money on. So I figured I'm just not going to touch it. But it was an interesting.
It wasn't, and something I never touched, but was just a mental thing that was a bit fun. I would just remind everyone, at least my opinion on it. What has happened in Iran yesterday, or until this morning, with the president passing away. I don't think at this point it's going to create any change in Iran. I don't think it's going to do anything to the oil price, because I've seen people asking for me an oil analysis. I don't think this is going to have any geopolitical change because there's somebody above the one that passed away. So it's still going to be the same continuity, and still going to be U.S. sanctions on Iran. So I think that we are still not going to make any difference in the oil market.
I think so too, Ivan. And, we see that in the price of gold, see it in the price of oil. I mean, gold especially jumped pretty strong. And I would actually make the case that this jump in oil, in gold is not even isolated to that event, with the president. And, it's really just the story of, central banks. And there's so many reasons right now that gold is continuing to go higher, whether it be, economic slowdown globally, whether it be central banks buying, whether it be geopolitics. I really like the trade to the upside. I continue to hold it. Stops are trailed in this one, and we will see where it goes. But I'm with you. I don't think that chasing, right now, or buying oil or gold on geopolitics, I think that's a very unwise play. Sure, it might pop and might go straight up if something escalates, but I don't know how to time that. And I don't, anything like that. Same thing with GameStop. I can't time that stuff. That's not something I can understand and reasonably have an opinion on, because I don't know what's going to happen next. And with economic data, at least you can observe trends similar to what you can do with price action. So that's my thoughts.
Is this gold trade now turning into be the 2024 trade?
It's it is currently in second place for me. I had one trade earlier in the year on gold that was, actually much more impressive in terms of distance, but I've added a lot of size to gold. I really like the trade. And we'll see if it stops me out here, it'll be a good trade. If it rips higher, it will probably be my best trade. So we'll see. Fingers crossed.
I'm hoping for you.
Thanks, Ivan. And thanks, Ivan, for coming on the show. I also want to just say, if you're listening with us here live, Ivan does coaching webinars, as he mentioned earlier, within our Discord channel. You can also contact him if you're looking for one-on-one coaching, and you can find him on his own YouTube channel. We're going to be dropping the link here in the chat. And then, Ivan, you don't use Twitter. I still got to convince you to use Twitter, but we have Twitter viewers right now. How can they find you? What's the best place to send Twitter fans to find Ivan FX if they're interested?
I think there's an Ivan FX Twitter account, actually.
Oh, it's at Ivan FX?
Yeah, somewhere around that direction.
Okay. Guys, you can find him on Twitter. You can DM him. You can chat about your life with him, whatever you want to do. Ivan, thanks for coming on the show, and we'll see you back next time, man.
Thank you. Thank you guys for having me.
All right. See ya. All right, guys, now we're going to take just a quick break. We're going to bring in Chris Pulver. I apologize to Chris. We are a little late on the show here today. So coming in right after this, we will be bringing in Chris to the conversation. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing.
thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
All right, and we are back with Chris. Hey, Chris, how's it going?
What's happening, Nick? Happy Monday, everybody.
Hey, good to be back on the charts with you. And S&P, Nas, they're back to the highs, and no shortage of stuff to talk about this week, Chris. We have Nvidia earnings this week. We have meeting minutes. What are you looking out for? Is this just going to be another melt up moment where we just see, new highs lead to more new highs, or what are you thinking?
Yeah, we're gonna see. So my thoughts going into what we discussed last week. I was cautious about a couple of things, right? So coming into just looking at the charts, technically, this is the SPY. I mentioned on the weekly times again, and let me bring down my subgraphs here. Getting up to these all-time highs again has me a little bit cautious on the number of points or the number of additional dollars we can move to the upside. Here's why. The indicator that I have here, you know this one well, Nick. This is Knoxville divergence, classic divergence indicator with overbought conditions and divergence. So we have higher highs in price. We have momentum disagreeing, as well as overbought conditions with hidden bearish divergence. That combination right there, to me, means that the higher probability is we're actually going to see more of a directional move to the downside. Now, how big is that downside? I don't think it's big. I think that if we have another dip or pullback, it's going to be maybe to the 2 to 3% window like we've seen most of the year outside of April. We have NVIDIA, like you said, we have FOMC minutes on Wednesday. The SPY shows divergence. The Qs also showing divergence. Overbought conditions, all-time highs. Momentum disagrees. Overbought conditions with hidden bearish divergence there. The DIA, same thing. We connect the highs, higher highs in price, divergence, as well as divergence and overbought conditions. So let's talk NVIDIA, right? This is where I think the market makes its big move. I'm probably going to position myself this week, Nick, for a Wednesday 30 right now, $2.31 trillion, $2.37 trillion. That is certainly enough to move the market all by itself, maybe 1 to 2%. So if I look to position for that Wednesday, Thursday, Friday, let's say, it's after hours on Wednesday as NVIDIA. Coming into Thursday, I would expect some similar gaps, right? We had big gaps earlier this year with NVIDIA. We had a big gap the last couple weeks because of Apple. We've had the melt up because the broader markets, everything's finally back above the 50 moving averages and the 200 moving averages. So we've had earnings that have been great, and NVIDIA can do no wrong. And I don't know how the market's going to react. It's an earnings play. It could be up or down. It could be good earnings with a bad move. It could be bad earnings with a good move. But I will say that if the market gets excited where NVIDIA opens up here on a Thursday, I could see that move getting faded right away, just based on the bigger picture and the bigger technicals. If NVIDIA earnings are somehow bad and the market doesn't like that, I can see NVIDIA dropping a big way and also having that correction play out in the markets right away. So I really do think that NVIDIA is going to be the make or break on whether we go and sustain a higher move or if we have a pullback coming near term.
Well, on a week like this, Chris, you got to think also from the overall picture here, a lot of it is behind us. A lot of the data that we had been looking towards, with high hopes like inflation and jobs data has been pretty much Goldilocks. It's been pretty much what the market has wanted to see. So I think when you weigh that in, it just adds to, okay, all of that is behind us. There's not something behind NVIDIA earnings in the short term, in the near term, that is like, oh, well, we can just keep looking towards that. Like, I think what's going to happen is NVIDIA's earnings are potentially make it or break it. Like, it is potentially going to either signal, okay, we've solidly cleared the previous high and perhaps we just see that run up continue, or if it's anything but stellar, anything but perfection, I think you're spot on with, probably a pullback, probably, especially, technology as a whole, a broader based pullback. And you got to think too, NVIDIA, I was saying this earlier in the stream, for my listeners who are not stock specific people, or you're not trading indices, please don't tune this stuff out, because NVIDIA is such a key signal to beyond just the stock market. The semiconductor space nowadays acts almost as like one of the number one indicators of like global economic demand, because right now stock indices globally are more exposed to tech than they, I believe, have ever been. I could be wrong about that, but I believe like technology weighting in the S&P 500 and markets abroad are so heavily exposed to technology, and the whole technology trade is about AI and innovation, and all of that requires chips. So if there's a slowdown in the demand for chips, the entire kind of demand for chips slowing signals that, maybe the trade is potentially slowing. And if the demand is rock solid and red hot, onwards we may go. So I'm very interested to see how the earnings comes out. And if you're wondering, that also impacts other, areas like currencies and gold too, because I think that if you have just a rock star stellar NVIDIA earnings, let's just paint that picture. How does that impact gold, and how does it impact the dollar? Well, gold, that kind of instills confidence in the world's kind of economy. So that could actually be a hurtful thing to gold. Just a kind of a nuance there. And then finally for the dollar, could be strong for the dollar if you get a really strong NVIDIA earnings. That's tax revenue that could go back to the US government. You know what I mean? So something to think about.
Right. Yeah, and I think looking at the dollar as well, I mean, the dollar is, so what are your thoughts on this, Nick? So the dollar to me has been in this pretty obvious broadening pattern, but I could see the dollar doing this where we have and higher lows, and we go from a broadening pattern, which would be an expansive move, to then a narrowing move like a wedge. Too far ahead, but the dollar has been the least like trader friendly basket going into 2024, because it's been all over the place. We've had, up moving the dollar, down moving the dollar, up moving the dollar, down moving the dollar. If we break 103.90, I hate to say it, but breaking below 103.90 and certainly breaking below 102.70, I'm bearish on the dollar back to those 101 and 100 levels, maybe even more. But I still don't know how the dollar would get weaker in front of other central banks that possibly start cutting as early as June and July, and the Fed's looking at September. So that would be interesting to see if there's a flip where the dollar gets weaker in front of these other banks that might cut earlier than the Fed. And if you look at the watch tool for December, I was looking at this earlier in my session. We're not really convincing, based on the probabilities right now for the CME Fed watch tool, we're not really convincing that the Fed should see another rate cut in December. We thought it, right? I mean, a couple weeks ago, it's like, oh, they're going to be 2 cuts this year. September is the one that is pretty obvious. Like, that's 50% probability right now that the market's kind of running with. If there's a cut this year, it's coming September. December, it's split. I mean, 36 to 34 for a pause right after a September cut, or another cut in December. So not really sure what we have. Tap across the 56, that's the chart one. So I look at the dollar index, and I think NVIDIA would be the excuse for the market to make the bigger movements this week. If it's to the downside, I could see the dollar getting bid from there, and this support continues to hold. Structurally, some really strong support. That'd be the obvious play for me. It's more of a wait and see. I'm not going to position ahead of NVIDIA. I'm not going to position ahead of the anything. I'm going to wait for the dollar to confirm, take some clean trades, maybe take some swing scalps. But I'm just trying to play it really clean. I was in Seattle this weekend for a Tasty Trade conference, and I'm going to start incorporating a lot more futures and micro futures into my portfolio with some currency exposure. I mean, things like actually another way to kind of add the way I want to play the Japanese yen. I don't think the carry trade is going to unravel yet, but when it does, and if it does, and how it does, I could see the dollar weakness going in to favor some Japanese yen strength and higher volatility in the Forex market. One thing we have clearly seen right now is way less volatility in the stock market, and also way less volatility day to day in the currency market. Outside of, 2 interventions from the Japanese yen in the same week, our daily trading ranges are low.
Sure.
They're so low day to day. So we have low volatility in the currency
low.
market, and that is followed by higher volatility. It's going to change.
Yep. Chris, I don't know if it's you or me. Can Chandler or James let me know? I think there's a little bit of delay. I don't know if your computer is like working hard today or if it's your internet connection or something. And let me know again, Chandler or James, if it's just me, but I think there's like a little delay in our conversation / when you're sharing the screen. So I just wanted to check in on that. I'm just going to give you a quick update here, guys. S&P 500 here, now breaking. We're near all-time highs as we speak. Here's the 4-hour chart. Look at that, another green candle forming. And, Chris, I actually sold. I closed out of my covered call. I took a punch to the gut, and I said, you know what? I don't want to be taken out of my trade. I know I wrote the covered call against my VOO position, but I said, you know what? Everything here is pointing to me to stay long the market. And yes, do I know that I sound just like everybody else on CNBC who says, oh yeah, market's going higher from here? Yes, I know that. But sometimes sentiment is right. The Dow just hit 40,000. The market looks just real strong. The market looks like it wants to go higher because, again, all of the things that had been short-term questions and concerns are dried up. I mean, yields have backed, they come back down a little bit. That's a positive. People were afraid that the economy was just going to be an instant melt up or continuous melt up. And so that fear has kind of come off the table. Geopolitics in the Middle East. Yes, you had this news overnight about the helicopter down, the president of Iran, but you have to kind of listen in closely to that and say, is that really going to change the story of what's been freaking out the markets? I don't know that it is. Israel didn't claim any participation in that. So, who knows what happened there? If there's conspiracy, I'm sure there's plenty of speculation. But the point is, in the immediate term, I don't see that being a massive, escalation event. So that's not really on the table. Earnings were rock solid. I mean, yes, we have NVIDIA. That's the last kind of big name to earnings season, I would say. But again, overall, the picture looks really strong. And I think the path of least resistance is to the upside on the market. I do think that we are probably, as you mentioned, Chris, probably due for a pullback. I mean, we've had just several straight weeks now of just straight up moves. So you probably see some pullbacks in here. But to me, I want to remain long for now.
Yeah, I do not disagree. In fact, I was just looking at the NASDAQ, and look, the Dow hit 40,000 for the first time. It officially took 7 years to double. So it annualized about 10.28% for the last 7 years. The NASDAQ, maybe 20,000's in the cards. That's another, it's not that much higher. It's only another 6 to 7% higher, which in a Goldilocks type year, we could certainly see the overall broad market, the indexes, the ETFs all push, maybe high teens, maybe 20, 22 to, 20 to 25%. It makes me very cautious moving into 2025, but man, I would feel like a moron if I'm just trying to sit here and justify shorting a market that is not interested in going down at all. So, you took off your covered call and you're just kind of letting your positions run. I don't think that's a bad thing to do. You can also always roll your call out, collect some more credit.
Sure. Yeah, and I thought about doing that. I ended up choosing just
because I'm sure with the indexes you can roll for give yourself more time, possibly out in time, and then possibly up in strike price. So you can maybe roll it for credit.
Yeah. Chris, I'm going to ask you, can you try restarting your computer? I'm not sure what it is, but there's like a pretty big delay, and other people are saying they're seeing it too. So I don't know if maybe something is just working on your computer, but if you want to restart your computer or back out and just try and come back in, that might fix the issue. I'm not sure what's up with it.
Okay, let me back. I'll back out, come right back in.
Okay. Sorry about that, guys. Yeah, Chris is going to try and just fix it. I'm not sure. For a little bit there, I was like, am I going crazy or is it just me? But I think what happens on my end sometimes, or with my old PC, and I think Chris has probably an incredible PC, but sometimes, like if my computer is working really hard, the streaming software here starts to get a little bit delayed. And so I don't think it's me. So please let me know if I come in choppy in any way, but I think Chris restarting it should hopefully help. Anyways, yeah, so I just wanted to add context to what I was saying to Chris there. So I am long VOO. I closed my call. I took a loss on the call that I sold, but I think in the greater good, it's going to turn out fine. I'm still long the S&P 500. I wanted to stay, I wanted to stay in the position. And so, we just went ahead and I went ahead and closed out the covered call. And as Chris was mentioning just before, he pointed out that I could sell another covered call. So I will say this: if we continue for another week, if NVIDIA earnings, actually this might be the trigger for me. And we can try bringing Chris back in. Hopefully he's better now. We'll say hey to him. Hey, Chris.
Hey.
Hopefully you're all good now. I was going to say, to your point about rolling or selling another covered call, the reason I closed it too, like just closed it outright and just realized the loss on it, was like, if we get NVIDIA earnings that are just incredible and the market pops on that and the hype runs, I'll probably sell a covered call in that moment.
For sure.
Like, that's my chance. And if it drops, then whatever.
Yeah, no, you're right. And also, and I've been in the situation before too, where, you can always typically roll out index covered calls for credits, but you'll get in a situation where the market is outpacing those covered calls. And it's like, you roll it. And all of a sudden now you're stuck, 2, 3, 4 months out.
Yeah.
And you're capped at your gains and you can't roll it any further. And the market's up, an extra $5, $10, $15. And you're like, well, I collected a whopping, $3 of covered call rolls and I'm missing out on $10 of upside. So I get it.
Yeah.
I get it. So
yeah,
I'm hoping that the moves go, your way. And, just speaking of this week, right? So I think I'm going to take a look here at this is last week. So keep it really simple. Like last week's breakout was on Tuesday. So we had a Tuesday breakout. Wednesday was a gap. Wednesday to Thursday was a decent drift. Wednesday's move was really the directional day of the week. And then Thursday, Friday, pretty quiet. Here we are sitting at the highs of the week once again. Here's the probabilities for you, Nick. If we break the highs from last week again, the probability is about 70% of the time we will stay higher for the week and not come lower. So what I might end up doing is just doing some credit spreads down here and just keep a directional bias that's slightly bullish. I might actually take this and do a SPY put instead, which would be right here if I did this on the SPY. So the SPY last week was all the way down to 519. If I did just like a naked put on the SPY, I wouldn't mind doing that. I have a bunch of trades that they're slightly bullish bias, but they're out of the way. I'm doing like ratio spreads. I'm doing broken wing butterflies. I'm doing all sorts of things where I'm collecting some credit, possibly willing to take some assignment. But if I own the shares of the SPY or the DIA or the QQQ, I'm owning it exactly at prices that I want to own it. So, I obviously would like to own the SPY at 500 or lower. I'd like to own the Dow at, 400 or lower. I'd like to own the NASDAQ at 3 or the QQQ if it was 400 or lower, the Dow at 380 or lower. And I have positions worked where if I'm willing to take assignment, that's where it's going to be. Otherwise, I'll just collect in the next 30 to 45 days. I'll just grab an extra $3 or $4 of credit. So
I think that's a very fair approach, Chris, because you got to think. And by the way, the lag seems to be fixed, so thanks for doing that. The election this year, I think, is another thing. I think that the probability, and not just me, the VIX futures market also says the same thing. The probability that you just see a smooth, no problems run to the upside, I think is unlikely. And I'm coming from a bull, right? I've admitted defeat. My covered call was my hedge, was my, tent of bearishness in there. I closed out. I am bullish, but also I think that with an election year, to think that we're just going to enter a slow chug grind with no problems whatsoever, it's probably unreasonable. I think that there will probably be pullbacks, as you said. Maybe the more we go back to that 2% drops, and maybe we just play that for a while. And I like the idea of staying long bias. And I also like your idea too of, I love that stuff is of like selling out of the money puts and just saying, if I get assigned, great. And if I don't, then premium while I wait. And that's fine. I think that, getting also one big mistake you could probably make is getting too caught up in this is the perfect, perfect storm, because, we make this point often, Chris, now that all the clouds have rolled away, look where we are. We're already past all-time highs. The problem that I always point out when I want to buy stocks or I want to buy indices or gold or anything, I like to see a good point of view from both the bulls and the bears. I talk about that frequently because right now the bears have like very little tangible case. When I listen to CNBC or Fox or anything, Bloomberg, whatever, the bears are like hiding. They don't come on the camera anymore because there's nothing to say. They're so, all of the concerns, inflation, but then they missed the earnings story, which was Rockstar. So it's like the story for the bulls is so clear, but that makes me nervous because when that starts to happen, those are where you get the sudden, reintroduction of a bear case, and that's where the market drops. So I don't know. It's tricky. What do you got for us?
I'm going to check one thing here. I'm just going back to the fear and greed index. We talked about this a couple of weeks ago and just did a spot check on it. It was back to neutral. So here we are at all-time highs in the indexes, and we're officially hitting greed. That's not a bad thing. I think that we can stay here, but if we start to see extreme greed in this case, Nick, then I'll be way more cautious and probably plan on maybe a 1 to 3% correction. So I think right now things are looking fine. NVIDIA this week, like I said, I'm treating NVIDIA. I'm trying to be neutral. Like NVIDIA, I did the numbers on this. The last 10 earnings reports, only 3 of them have hit the expected move or beyond. So it's not a high probability trade as far as I'm going to go long NVIDIA and expect to see the 90 to 100 and some dollar move. It's going to move regardless. Like there's going to be a gap from Wednesday to Thursday, most likely.
Expectation's 9%, right, Chris? Is it something like that? Expectation. I listened to somebody talking about it. They said like the expected move in the options market is like 9%.
That's on the low end. I mean, the expected move over the last 80 earnings is like 14 and change. I actually was a little bit more conservative, and I'm looking at like a 12.5 to 13% move. So the IV, I mean, the implied volatility on NVIDIA, Tasty's showing it their expected move around $90 for the week. Or if you go out to like this Friday's expiration, it's like a $90 move. I'm going a little bit higher than that, like the $120, $125 move. So I already talked to Frank about this offline. I think there's an easy way to trade it. And it's going to be cost effective. I'm just going to do a couple of credit spreads. It'll be in the money bull put spread, in the money bear call spread. I'll try to collect about 70 to 80% of the premium on that. And if I'm right, one side pays, one side doesn't, and I take the profit run. And then I'll deal with what the effects are. I'll deal with what it does to the SPY. I'll deal with what it does to the NASDAQ, good or bad. So I'm kind of treating this as that's a good volatility play for this week. I do think the markets, have a chance to rip higher if I'm following just the simple. I mean, look at this right here. We have ripped for 4 straight weeks to the upside to take out all-time highs, which took, to the downside. We had only 3 weeks of selling, 4 weeks of upside. What can we stretch to? We can easily stretch to 5, 6, 7 weeks in a row. We had 16 out of 20, 17 out of 20 weeks going from October to March. So, I mean, it would seem a little long in the tooth if we had another like 15 out of 20 weeks to the upside, but it can definitely happen. It can happen with, the bears being silent, the bulls just running, low volatility, VIX is at lows. There's nothing to disrupt this right now. But I do say this, how high are these markets going to go ahead of the election? Because if the indexes are up freaking 20% before we come into a November election or whatever drama ensues from, a couple months into the election, I don't think we're going to, I don't know, dude. I could be totally wrong. And maybe it's like, oh, the markets are up 30% this year. It's like, maybe they are. But man, I would be a freaking bull going into or a bear going into 2025. If we're up 25, 30% of these indexes, I would be bearish going into 2025. I'm sorry, but that's going to be my forecast.
Well, and here's not to get too political, and I don't have really a stake in this game, to be completely honest, but I've heard this theory a couple times, like that there's a presidential twist and then or change of office, and then perhaps there's like some volatility that ensues after so that they could like drop it on the next guy. And I don't know. I don't know that they plan these things like that or anything. I'm not, really saying that that's where I'm at, but it is possible. You never know. I mean, pumping into an election looks great for the incumbent. It doesn't matter if you're favoring Republican or Democrat, anybody, myself included. If I was the president, I would say pump these things into the election so that it looks good. Anybody who's the president wants to stay president. So a stock market and 401ks being up is a massive benefit. Doesn't matter who sits in the chair. So yeah, I mean, really interesting stuff there. Chris, I've got to ask you one more thing before I leave the show for you. Silver and gold popped big. We hit all-time highs overnight on gold. Obviously, there was some geopolitics involved with the Iranian president passing away, his helicopter going down. Lots of course, as always, speculation and questions as to what happened there. But regardless, take the geopolitics out of it. I still like gold and silver a lot. I think that there's upside here. For me, it's become one of my better trades this year. I've added 3 different times to this position. I'm curious your thoughts, because I know you're also, are you still very profitable on your silver setup?
Yes, I am.
Very nice.
Silver's one of my better runners, and sitting at highs again. I actually, and I was even willing to take some additional assignment on SLV last week. I had a 27 by 26, but the darn thing went up ahead and finished above my 27. So I didn't get assignment. I just took my full 59 cents of credit. I'm going to keep doing this. I'm going to keep doing credit spreads. I'm going to keep looking at trading some. I actually, so I have a core position on GLD. I have a core position in SLV. I'm just trying to find ways to add to those. So I can hedge a little bit to make sure I'm protected to lower the cost basis. But truly for me, I'm bullish on both of them. And I mean, right now, since the technicals look better to me still on silver, I'm bullish to a bit stubborn. I would say, like, I'm going to be long silver until this first level, until SLV hits 32.77, and that would put us up towards a measured move. If I go to XAG, that puts me up to a measured move around 35.67. So to me, there's another $4 to $5 of upside on silver before I'm looking at taking some profit and then redeploying a little bit more efficiently. And all that would be is I would be up probably 4 or 5% for my entire portfolio on just this silver trade, thanks to establishing a core position, thanks to adding options to that to layer in some additional gains. And to me, that's great. And it doesn't have to be about, oh my gosh, like I doubled my portfolio on silver. Well, I didn't, because it's just one trade, but it's a good boost and it's a good pad to my bottom line. And I think gold and silver are great this year. And the one thing that's also, this is crazy, dude. We're sitting at all-time highs. But the comparison of year-to-date sectors, this is wild to me. We have the financial sector, and we have the utility sector, and we have the energy sector that are just as good as the Mag 7, just as good as technology, just as good as communication services with your Netflix and your Metas. It's pretty wild. And usually, and this is where the bears did have a case before we just hit all-time highs and ripped back from the April lows. The bears did have a case to say, like, well, anytime I've seen the energy market, utilities market leading the way, that's not a good sign for stocks. Well, somehow it is this year. And I don't know what to make of that outside of, maybe this is the reversion to the mean. And this is, I mean, utilities has been battered down forever. And it's usually a terrible sector to be in outside of it's a dividend play. But I have something like the energy and utility sector right now. I don't know if it's because of maybe this gravitation towards nuclear energy. I don't know if it's gravitation towards AI and having more efficiencies on the grid. I don't know if it's because energy is getting more expensive.
I've heard that with the utilities a lot, Chris. I've heard that the, things like Palantir, the companies that can help to, really improve the grid's efficiency would be a profitable thing. But, it's not only XLU, you've also, as you mentioned, you've got energy up and financials. So, there's a little bit of something there. Consumer discretionary being flat is also a little, concerning to me, I guess. I guess one of the last areas that the bears right now are holding on to is the consumer. Like, you could point towards, like, not everything is perfect and rainbows for the consumer. So there's that, and real estate is still a question mark. And, I don't know. There's always a bear case, to be fair. But I think it is worth mentioning XLU, XLF. And, I think that adds to the story for me with gold and silver. You look at the stock markets, they've had incredible runs. It doesn't mean they can't continue, but investors may be looking for something that gets them out of the way of the dollar or gets them out of fully exposed to the stock market at high evaluations. So I think that there's something here for gold. I think also on a relative basis, gold, yes, it's at all-time highs, but I still think it has much, much more room to the upside. We've gone down that path a couple of times, so I won't repeat myself. But yeah, I mean, story for gold looks really good in my view. If you see the economy start to slip a little bit more, it's going to even look better. So we'll have to see. But yeah. What do you think on that, Chris? I'm gonna listen to your last take, and then I'll step out and give you the floor for a bit.
Sure, I could see this, right? We have this big rip on gold. I could see if we're gonna have some look. I believe that gold is going higher, as I do silver. It's not going to be without volatility. So in that sense, I could see us forming a little bit of a pullback or sideways range here. But if we come back and revisit these dips, that's a great spot to be buying again. I mean, it's hard again, as always. It's kind of hard justifying. I'm buying at highs, buying at highs, buying at highs. It's great when it goes higher, higher, higher. But I see some technicals. I tend to respond to these indicators. I've traded them for a long, long time, and they work on higher time frames. So when I see daily charts overbought and oversold, when I see weekly charts overbought, oversold with divergence, I'm a little cautious. So I could see gold just having a little bit of a break where we have some highs, we poke these highs, and then we pull back a little bit. But it gives the bulls a chance to reload. And we just kind of survive this area, and then the next leg is, in fact, higher. And same thing on silver. If we break all-time highs, and silver is still catching up, in my opinion, which is why I'm not dumping my silver positions yet. I think gold, after having this run right here, that's gold. That's been awesome, right? Silver is just now catching that and outperforming. So I think silver has the upper leg at this time, but both look good to me. Maybe some pauses and pullbacks, maybe some opportunities to add on dips, but I'm bullish on both. If I'm taking a direction, those are two great trades right now for me.
Yep. Love it. Well, Chris, I'm going to give you the floor for a little bit before I step out, guys. If you're listening here with us live and you would like to find out more information from Chris, he has his own YouTube channel and Twitter. If you're watching on Twitter, it's at Real Chris Pulver. If you're watching here on YouTube, we'll drop the link to his channel so that you can make sure to go subscribe. Please do that. It helps us to support the channel just by supporting our guests and co-hosts and everybody who comes on and contributes to the show. So make sure, again, follow Chris. Thank you guys very much for hanging out with me. And Chris has got the show for a little bit here. Stick around with him and enjoy. Chris, thanks, man.
Thanks, Nick.
See ya.
All right, everybody. I will take some requests. I saw oil pop in there. We didn't get a chance to talk about oil. Oil, to me, is still kind of proving that the bulls are around. I would obviously much rather pick my battles where I can buy oil at 65 to 67, or I could sell oil up here at 90 to 95. In the middle, I'd say the possibly the oil futures trade or the spec play would be your long with a stop loss right here, and that would be effectively, if I'm on U.S. oil, you could take a crack at it right now at 79 and change, put a stop loss below 76.70. And that's tight, obviously. But the upside would be if we do revisit these highs, you can see the asymmetry. So you have more reward than risk. Okay. If we also revisit these previous highs, then you have far more reward than risk. And that's if we're right. I could also see oil being very choppy. So this is not my favorite place to be long oil. Like I said, I'd rather wait and see. Maybe this is better. Maybe this is better. I would short it. I would get long, right? I mean, if I'm doing well in gold and silver, I don't really care about oil right now. I want a better price. I want better technicals. I'm not going to worry about it at this time. Dollar index, as Nick and I talked about, dollar index is still, I've just got to be a little bit more convinced that we have a better directional play on all the dollar crosses. If I take a look really quickly at the dollar, Aussie dollar has broken recent highs, but paused for the last 3 days. If you look at euro dollar, euro dollar has pushed up and kind of threatened this initial trend line that I spoke about the last couple of weeks. I was looking for a trend line like this, but notice how it just breaks and pauses. I could see if we have a red candle that closes back down here, I could see that as a fake out trade. That's a bull trap, and the dollar actually gains and the euro returns. Now, this is what I mentioned earlier with the monetary policy divergence. If the ECB cuts rates as early as June and the Fed's not cutting till September, fundamentally, it doesn't really make a lot of sense that the euro would continue to gain strength over the dollar, right? It wouldn't make sense. So not that trading sometimes makes sense, but I could see this is why I'm just waiting before I deploy like a full-on dollar basket trade. If we see the downside here, I think I'll take a chance at selling the euro dollar, stop loss above, go after some fresh lows, possibly coming back into this level around 104 to 105. But I want to see some confirmation first. Pound dollar, I actually did take a position in my trading room that I'm really not loving right now. We took a small trade at 26.50 or 26.60 to sell the pound dollar. Stop losses above this yellow range right around 28.10. So if I take a small loss on it, so be it. If we're right on the dollar index and it does get some love this week and catches bid, then the pound dollar retreats. Maybe I get my trade up 50 pips or so. I might just move it to break even, not worry about it. New Zealand dollar, same thing, right? We had this decent little leg. This was a trade up last week on the 15th, last Wednesday. Big push against the dollar, and then we've gone nowhere for 3 days. Go to dollar CAD. This to me, I'm hoping I'm long dollar CAD right now. I'm hoping that we don't come below 34.75. If we stay above 34.75, I'm waiting to see possibly this trade. We have some correction here. We have some chop. We have some coiling. I'd like to see if after these last 3, 4, 5 days of selling pressure that we just hold this level. Past resistance becomes support. There's some decent structure in here before we take out that low. So if the dollar CAD can hold and we get a bid to the upside, awesome. Let's see if the dollar CAD can revisit 3,900, 1.3950. So I'm long dollar CAD for that reason. This one technically looks a little bit better than others. And then dollar Swiss, it don't matter. I'm buying this one. I'm gonna buy dips. I've got my 38, my 50, my 618 pullback levels. I'm long against the Swiss, and I'm holding on to it. Somebody asked me on my Discord channel, Chris, why are you trading the Swiss, and why are you so short against the Swiss? To me, it's the one carry trade I can participate in without all the fundamental drama. The Japanese yen, the Bank of Japan, what are they going to do? They're sitting at 30-year lows. The BOJ is going to intervene, which they've done. They did it in 2022. They did it this year twice in 1 week. I want nothing to do with the Japanese yen outside of the time that the markets are going to deleverage and the market's going to unravel this carry trade. Then I'll participate in the yen. And, how do I time that? I don't. I just start to acknowledge that it's happening. I start to be aware of the levels and I start to participate in it. But I am not trying to call or anticipate Bank of Japan monetary policy because they've come off of negative interest rates. They're sitting at 0 to 0.1%. I don't know if they might not have to raise rates ever again to see the Japanese yen gain thousands of pips in strength, or maybe they don't have to do anything else and they just get another 1,000 pips weaker. So I'm just exhausted by trying to be perfect on the yen. So I'll just wait. But the Swiss to me technically was sitting at 20, 30-year lows or highs, and it was super resilient for a couple of years. And then they cut rates. The Swiss National Bank this year was one of the first banks to cut rates, and they were coming off of negative 0.75% and flipped it all the way up to 1.75, and they just faded it back to 1.5. I could see them cutting again to 1.25, maybe cutting to 1%. And offering a bit of this carry trade differential. So for me, the carry trade is better on the Swiss. It's better technicals. I'm getting paid on swap. I'm getting paid also on pips right now. And so that to me was just a much better trade. So somebody asked that question. That's how I answered it. And I like the Swiss. And so I'm stubbornly bullish against the Swiss right now. I'm not trading the Swiss yen. I don't want to have the yen exposure, but everything against the Swiss elsewhere, I'm long. So Aussie, Euro, Pound, New Zealand dollar, long against the Swiss. CAD, mentioned that too. Okay. Dollar yen. Let's see. Good there. Yep. So everyone wants yen crosses. Let's take a look at the yen pairs. So yen, we're trading up to 104.21. What did we say? You got to watch these intervention levels, right? This is the first level intervention on the Aussie yen at 105 and change, all the way down here towards 99, or just shy of the 100 mark. Anybody that was paying attention to this in the near term, the best trade would have been buying that failure to take out the intervention lows and then be long. And just trail it. I was long on the yen, and we took profit around that halfway point after the second intervention. Took a nice chunk of profit. I'm happy with that overall. Obviously, I forfeited some, and I missed out on some. Okay. When does this unraveling happen? When the Aussie yen's on the right side of this trend line. If that doesn't happen, there's no reason for me to be short on this pair. There's no reason, right? Do I want to justify it now? No, because I think this high and this low for right now create some indecision where we have to wait. But if I'm wrong and it just keeps going risk on trading, one thing you have to know is the Nikkei 225, after making this comeback for the first time in 34 years, right? This is kind of, and this is, I should have brought this up when Nick and I were talking. The Nikkei was outperforming the U.S. markets in a big, big, big way. Okay. Look at this interesting little switch. Now we have the U.S. markets at all-time highs, and the Nikkei after a pullback is about halfway there. So Could I see the Nikkei coming back up to hitting all-time highs again? Yes. Could I see it exceeding all-time highs again with a weaker Japanese yen? Yes. Right? I could see that the mission right now for the Japanese yen and the Japanese economy is, let's see if the broader market will continue to rally for them. If it does, it's going to rally on a weaker yen. There's no denying that a correlation of a weaker yen and a stronger index has happened for the last couple of years, especially, right? Huge rally in the Nikkei over the last couple of years and huge weakness in the Japanese yen the last couple of years. Okay. So this one, I mean, in fact, I should just set a chart alarm to see if we break the highs, we're probably going to see a weaker yen, which means it's probably going to test or probably going to take out those recent intervention highs. Don't be surprised if it does. This is why I'm saying don't waste your breath, your time, your energy trying to call a top on the Japanese yen, right? And if you're trading Japanese yen futures or trading FXI or FXY, don't try to call the bottom. It might drift lower and it might drift, you know, a little bit lower. It might drift a lot lower. I don't know, but I'm not interested in trying to be perfect on the yen. It would be if I want to call a top or bottom, I'm trading so ridiculously small that I can sit there and watch it. I could watch the Japanese yen get 1,000 points weaker and be okay. Just throwing it out there, right? So that's the type of mindset I would have. If I'm trying to participate and look for this big Japanese yen strength move, I better be willing to take another 500 to 1,000 pip drawdown. And if you're not comfortable doing that, then don't freaking call the top. Fair? Okay. So what about the Swiss yen? What about it? Don't trade it. I'm not trading it. So the Swiss yen to me, you know, ultimately could set up for a big pattern. I have the structure at the bottoms. This is what I want to see. If we break this level here, I'm short the Swiss yen. That's it. Until then, I really don't care. This one is not close to the highs, right? High, low, we're in the middle. I can see a lot of coiling here, maybe a wedge. But if we break and go higher, why fight it, right? Breaks and goes higher, stays in the channel. A bear would be convinced there. Right now, it's just trying to find good opportunities to buy low enough and eliminate risk. Don't do anything silly. Okay, trade yen small. If you're trading yen, trade yen small. That is it. Okay. All right. I think that covers it for the Swiss stuff. Gold and silver, we beat up gold and silver quite a bit. So LFC is asking, what about gold? I mean, I like gold a lot, right? But we're hitting. I've been clearly watching silver a lot because I keep typing in silver. Gold, you know, retested all-time highs overnight over the weekend. And I could see, you know, if we stretch a little bit higher, this was my full measure move from when we first had this upward move. So, you know, 2470 is my measure move. That doesn't mean I turn bearish on this. It just means I'm trying to buy dips. So at this stage, I could see a little bit of indecision and a little bit of a, you know, maybe a broadening pattern or maybe some type of chance to buy the dips around 2275 if they're revisited. Otherwise, I've got to look for a flag pattern. If this goes up, 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 and then we have a little bit of a pullback, look to buy a flag, something like that. If this trend is going to continue to be so aggressive, you know, that was arguably a little bit of a pullback. You can look for the same type of behavior. You know, if it's really a true, strong, ridiculous, exponential rally, you know, gold's going to be in a bubble ultimately. If we're forming a bubble, there's still a lot more to go, right? If we're forming a bubble in the stock market, there's still a long ways to go. You will be surprised how these markets can blow off these tops and have these capitulation moves that run, you know, I mean, from a percentage standpoint, let's say 3, 5, 10% higher than you think they're going to go. And it's nice to be a participant in that upside as opposed to trying to call the top. Right. All right. So some of you might be tuning in just a little bit later. I did the pound dollar, I did the dollar basket, the Dow Jones, major indexes. I'm a little cautious going into, you know, this week's trading simply because I have some alignments that I watch and I respect a lot in my trading. So let me go to the QQQ. So, and this is across the board. These are all the major ETFs outside of the Russell. All right. So you've got the QQQ for the NASDAQ. You've got the DIA for the Dow Jones. You have the SPY for the S&P. I see higher highs in price, but I see momentum disagreeing as well as overbought conditions with hidden bearish divergence. That doesn't mean I'm bearish. Okay. That means that I could see the market at least giving us a 1, 2, 3% correction dip before we're going to justify going higher, or we blow up higher, maybe because of NVIDIA earnings this week, and then we quickly fade back down to kind of make good on the technical assumption here before we resume higher. So for me to establish more of a long position, I'd like to see a pullback of some nature, whether it's a gap higher than a pullback or a pullback, and then we can get long again. That's all I'm saying on the technicals is I mean, we have stretched into overbought territory on weekly timeframes, which when it happens, I mean, just to take a look here. This is, I know the chart might look a little bit messy, but every time that we have stretched into overbought conditions, okay, take a look. Did we have a correction here? Overbought conditions on the weekly, do we have a correction? Yes. Overbought conditions here, do we have a correction? Yes. Overbought conditions here, do we have a correction? Yes. Okay. Did it get to oversold? No. Did it get to oversold? No. Oversold? No. Rarely has this on the weekly time frame hit oversold conditions, but here we are, right? We had a correction here. So right after we saw this divergence, we had a correction, and that was 2022. Here's our correction that I think we could be facing, in the near term. So that's all. I mean, look, the market, as I'm calling out these tops, the market's still making higher highs if you give it time. But I think that we could possibly stretch. I mean, look, the NASDAQ can hit 20,000 this year. I mean, would anyone, I would be impressed, not surprised necessarily, but impressed if the SPX can hit 6,000. That seems like it does seem like a long ways away. I don't think we can get there, but man, can we hit, 55? 6,000 would be, man, that'd be quite the stretch. We'd be another 12.5%. But I'll put this in perspective. Okay. The S&P right now, year to date, is up about 11%. If we go another 12.5% higher, that's not some crazy move where it's like, oh my gosh, unbelievable. The S&P went up 25% this year. It's happened. It has happened, right? Over the last 20 years, we have seen multiple 20+ years in the S&P. This is one of those type of years where it could be. I'm not going to rule it out. That's all I'm saying. It would be more costly to fight this market and claim and proclaim and just shout from the mountaintops it's going to be a bear market and just be wrong every single week. So I'll just keep trading. I'll just keep participating. I'll trade what I see, put a bunch of strategies in there to diversify, try to stay as, evenly distributed and not necessarily as high correlated as I need to be, or I don't want to be highly correlated. I want to be diversified, right? So that way something can make me money. But it is nice, and I'll say this, it is nice to have a little bit of a lean. If I lean into the bulls a little bit, it's helped my portfolio a lot this year, right? I mean, coming out of our Q4 last year, I was super bullish in Q4. It was awesome, right? I was bullish going into Q1 this year. It was awesome. I expected a correction in, March and April. We got it in April, resuming the uptrend. It's been a weird May to see us, March like we did. It wasn't really, all the inflation drama, the Fed drama. It was earnings. And right now we're staring at the broader market up above their 50-period moving average, up above their 200-period moving average. The broader market is bullish. And that's it. So the technicals look pretty good. The earnings consensus look pretty good. The forward optimism is there. The word recession has been pretty much reduced by, 50, 60, 70% of earnings transcripts. Nobody's talking about a recession, right? Nobody's talking about a hard landing. Everyone's talking about, a soft or a no landing, or, the Fed's pivoted more dovish because now we're expecting 1 to 2 cuts this year. So sure. Can the Fed ruin it all and, put a big turd in the punch bowl? Yeah, maybe, but they probably won't, I mean, the Fed is not supposed to be political, right? But in an election year, if they continue to allow fiscal stimulus happen in the background and having a slightly dovish monetary policy, they're fueling it all, and they're certainly not innocent in the situation for like these all-time highs. And maybe it is good, but we could be sitting here at all-time highs and nobody's happy. We could be so disgusted with the whole system that it's like, everything's up, everyone's back to new highs, but more stuff is expensive and inflation still stings and gas prices are still high and people are still pissed about whatever. So as a consumer, maybe it feels worse than what it actually is. But, I know my 401k is up. I know my, managed accounts are up. I know for me, it's been easier to trade this year than it was in 2022, certainly less of a battle. So I don't mind it, so pick your battles, life's short. You only get one chance, right? Anyway, not a PSA. Let's see here. Asset correlation matrix. Yes. Bullish trends target 2,500 on what? 2,500 on what? Looking at your, let's see, price waves more bullish wave 90. Well, I mean, but 92.25 on dollar Swiss is just going up to the highs. That's not anything great. I mean, if we get back to the highs here, 92.25 is right at these highs. I'm not excited there. I'm excited here. A little bit of a correction, slingshot me back to symmetry. Let's get to 96 or 9,700. You know, one of my favorite trades right now. I mean, yeah, they're all Swiss pairs are freaking awesome. I love these things. I'm long the Aussie CAD. This one's continuing to do very well for me. I've built here at these equal lows at 86. I'm still building right now. New Zealand CAD. Okay, New Zealand CAD. If I build a little bit. Just give me a second here. My New Zealand CAD, I'm still building long. I did the same thing. Double bottoms here, 8,000. Pullbacks to 81. I'm still looking to see if this will get back up towards 87 or 88. CAD Swiss, probably one of my favorite trades right now as far as having some upside potential. To me, this could all be setting up for a big head and shoulders where we've had our dip and pullback. If this is a neckline break, we still have more upside potential. We saw a bit of a crown pattern down here. Right, to start this thing off, I could see us forming a bigger break and a bigger move. Look, and this is all technical stuff here, but if we come back to this high around 68, I could see this setting up for a trade like so. We have a little pause. Let's say that this goes up to this high. Well, if we have a low, I could see us pulling back to the same level around 66 or 65. I would reestablish longs. I'd trade that to symmetry right in here. CAD Swiss, if I can, add now up to 68 and I can get pullbacks back to 66, I'll build at 68. I'll build at 66, trade this all the way up towards 71 or 72. One of my favorite trades in Forex is to be long, have positive swap, and have pips. If I can build this up for a 500 or 600 pip directional move and get paid to hold a position, delicious, right? It's great. So that's one of my favorite technical trades. And if it works out, I'll make a lot of money. If it doesn't work out, I'm still going to hold it for a while. Okay. So anyway. Gold, silver, we beat those up quite a bit. We like both. I like both. I'm long on silver, long on gold. I do expect there to be some volatility and pullbacks, but I'm looking to buy dips and establish some positions. Core position, I'm long, right? I'm using some futures exposure. I'm using some options. I'm trading the ETFs, GLD and SLV. So a little bit of everything there. All right. So that could wrap it up for the session. I'm going to jump into my trading room here at 11 o'clock for Equities on Demand. We're going to talk some portfolio mixes today. Like I said earlier, I was in a conference this weekend with Tasty Trade, Tasty Live event in Seattle, which was a lot of fun. And they did a great job. Awesome panelists. The team was fantastic. So took away some great information and want to start incorporating that to the trading rooms. So good stuff. Yep, they're posting it in the chat. Thank you so much, guys. Chandler, Nick, and the team. Frank, if you're still out there and you're watching, enjoy the rest of your time in Europe. We'll chat again soon. But yeah, we'll be watching NVIDIA this week, the Fed minutes on Wednesday. And for the rest of this month, I mean, as they say, sell and may go away. But in this case, it's more buy and may and stay because July and June, you look at the A1 Edge Finder, July and June are historically bullish months. June, July, and August. It might be a drift. It might be a melt up. But what better opportunity to have the market up, 15, 20% going into the election that even if it tolerates some volatility, we could still finish the year positive, right? And maybe we finish at positive 25%. Maybe we finish at positive 10 to 12% after dips and pullbacks volatility. So do I have a crystal ball? No, I do not. But I'll figure out a way to make money. Okay. One last question. How do you find good pairs if they all seem to be correlated? Pure volume? No. What pairs are correlated? Pairs for what? Currency pairs? Pairs trades. You want to trade the S&P and the Qs. You can hedge, right? If I'm long the SPY short, or if I'm long the SPY short the Qs, I'm hedged. Right? That's a pairs trade because one's going to win out over the other. Currency pair wise, you're looking at baskets. Dollar basket, is the dollar strong, dollar weak? Is the yen basket strong or weak? But they're not all correlated. I mean, dig a little bit deeper, you'll see that there's ways to trade them. But there's ways to hedge, there's ways to pairs trade, there's all sorts of ways to do that. Okay. So you can bring that question up and we can dive in a little bit deeper if you want. Cool. All right, I'll let you go, everybody. Thanks for being with me. Nick, thanks for passing on the show as usual. Happy Monday and happy trading, lots of profits. See you soon. Thanks, everybody. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to share free value to you, our audience, through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more, lest ye walk the plank. Join our crew as we head out to go long on gold. See you next time.